Hello traders, the title of the video is what time of day is best to buy stock. Alright, let's get started. You want to buy stock, what time of day is best to buy stocks. Alright, so talking about market opening time, so the market will open here when I place my vertical line, and we close here when I place this red vertical line. So the C represent the closing time, and the O represent the opening time. So between the green line and the orange line, we are talking about the first 30 minutes when a stock market is open, and here we are talking about the last 30 minutes before stock market is closed. When is the best time, okay, to buy stocks? All right, I'm going to place another line in the middle here. All right, so going to color that into black right there. So generally speaking, all right, most trading activity are performed by trading computers, algorithmic trading tool, trading machine, trading robot. In the past, it was done by human being, but today, when the New York Stock Exchange is open, more than 70% of the trading activity are performed by the computers. All right, so the first 30 minutes, okay, those computers or those market participants, in the past it was that hedge fund, banks, institutional investors, all right, private investor, individual investor, we give order to their brokers to buy a stock at a specific price for them. So as the market is open, the first 30 minutes, all right, you see a lot of orders being filled. So they are selling for their client, the broker will be selling for their client, or the computer will be selling for their client, or buying for their client during the first 30 minutes. All right. Also, professional trader will be adjusting their portfolio. So, bullish stock that are very profitable, they may decide to close those bullish trend. So to close a bullish trade, they have to sell to close the bullish trade. And to close a profitable bearish trade, they have to buy. So all those activities are happening during the first 30 minutes. And for a technical trader, that's not the best time to buy a stock. Or it's not the best time to buy stock as a technical day trader, swing trader, and so on. But investors, all right, hedge funds, putting in their order during that low volatility period because they do not like the crowd. They want to be the first in a quiet time before, okay, everything will happen. So the hedge funds or institutional investment banks, so they may be placing their orders to buy and sell, or closing bullish trade, closing bearish trade. They will be adjusting their portfolio, which means some traders have been in losing trade for some time. They want to get rid of them. So those are not trading activity as such. So they are just saying, I have to close this trade now. Has been a losing trade for some time. I don't want it in my portfolio anymore. So they shut it down. They're doing all kinds of things during the first 30 minutes. So for a day trader, the best time to day trade is after the first 30 minutes up to the first 2 hours. So the first 2 hours is from the opening of the market up to the end of the first 2 hours. That's the best time for day trading. But you do not want to place any day trade during the first 30 minutes. So you are day trading, in fact, for 1 hour 30 minutes. You are placing your day trade during the first 1 hour 30 minutes after the first candlestick bar is closed. After the first 2 hours, we have what we call the gap period. So it's the time between the first 2 hours and the time when New York will be open. So if you are trading during the London session, which is 8 a.m. London time, 3 p.m. 3 a.m. Eastern time when London is open, you'll be day trading during the first 2 hours after the first 30-minute candlestick bar is closed. All right. But then after the first 2 hours, we have the gap period. So from 10 a.m. London time up to 2:30 p.m. London time, that is okay, the gap period for the London session. All right. Okay, it's not a good time for a day trader or a scalper to day trade or to scalp trade, even for a swing trader. Okay. Now, when New York is open, again, we wait for the New York. Suppose New York is opening here, you wait again the first 30 minutes. The same thing that has happened during the first 30 minutes during London time will be happening. Hedge funds, institutional banks, and so on. They will be placing orders, shutting things down, adjusting portfolio. First 30 minutes, you have to wait for the first 30 minutes candlestick about to close. When New York is open. So investor, hedge fund are taking position during the first 30 minutes. Allow them into the market first. Even if you are a swing trader or a retail trader, you want to buy and hold, allow that first 30 minutes time to close first. All right. So New York is open, first 30 minutes close. You have 1 hour 30 minutes to day trade. So first 2 hours when New York is open or London is open. One can apply the same thing for other stock exchange like Tokyo or Hong Kong and so on, but generally it's London and New York. First 2 hours, 30 minutes. You understand what's happening during the first 30 minutes. I'm not going to repeat that anymore. The same thing will happen again. So New York is open at 9:30 a.m. Eastern Time. That's 2:30 p.m. London time. So from 9:30 to 11:30, that's 2 hours, yes or no? All right. So that's the best time for day traders after the first 30 minute candlestick bar is closed. Okay. During the New York session. So from 11:30 Eastern Time, which means the first 2 hours after New York is open, 11:30 up to the time when, okay, Tokyo will be open at midnight London time, all right? Up to that time, that's the gap period. So market open, first 30 minutes, market open, first 2 hours, until another market is open. Right? But one can still trade also the last 30 minutes when a market is about to close, whether London, New York, Tokyo, but I'll prefer London and New York only. Last 30 minutes. The same thing that is happening during the first 30 minutes is usually happening again during the last 30 minutes before London or New York is about to close. So the computers again will be placing order, filling order for their client. Broker will be filling order for their client in the last 30 minutes. That's why the following day we usually see stock gapping up or gapping down. Some market participants, institutional investors, trade even outside the closing time. But the last 30 minutes before a market is about to close, we see similar trading activity, similar market players as we have seen at the beginning and during the first 30 minutes. All in all, what is the best, what time of the day is best to buy stock of the day? So which means you are day trading or you want to swing trade. For swing trading, I prefer that swing trader enter the market on Tuesday. And if you are in profit up to the end of Thursday, shut it down on Thursday. So you can swing trade from Tuesday to Thursday and shut it down if you are in profit. But you can hold a swing trading position for weeks or even a month, all right? But you must to secure your gain as you go along instead of just hoping that everything works well. You must secure your gain, okay? Because anything can happen, all right? So the reason why I prefer Tuesday to enter a swing trade is similar to what we are doing when we are day trading. We are waiting for the first 30-minute candlestick bar to close. So a week is starting. We allow Monday candlestick bar to close to show us which direction the market is likely to go. So that's why I prefer Tuesday to enter the trade. Friday is similar. Friday is similar to the last 30 minutes of the day. Same thing. Monday is similar to the first 30 minutes of the day. So if you are swing trading, that's why we say Tuesday to Thursday, or if you want to leave it open for many other way, you want to secure your gain and manage the trade. All right. But talking about what time of day is best to buy stock, there's something else we need to discuss here because most hedge funds or institutional investor or individual investor, private investors do not worry too much about the time when they are going to buy. I'm not saying that they do not worry at all about it. I'm saying that that's not their first priority. Their first priority is to buy at a specific price level because they are primarily fundamental traders. So is the stock overbought? Is it oversold? All right. Is it below its fair value? What is the future for the sector? They check the management, they do their due diligence, they want to buy. So they want to buy at a specific price level. So they may place orders or ask computers to buy anytime the price reaches $6.27. Price come down or there will be filled, can be anytime. So anytime the price hit that price level, if the orders are there to buy, those orders will be filled. They'll be buying many days until they buy maybe 2 million shares or more or whatever they want to buy. So it's more to do about a specific price level. For those long-term investors, hedge fund position traders, all right, institutional investor, and so on and so on, a trading firm that want to hold position for more than a quarter or year, that those that are more fundamental trader than technical traders. All right, so they will be buying at a specific price. So during the day like this, as I talk about everything that I've said so far, those market players may keep buying anytime it hits a specific price level. That's what we call accumulation. So they are accumulating the stock, or they are buying it because of the dividend. All right, they want to like income investment. So they may be paying them dividend each quarter. Each quarter they get their dividend. Okay. The same thing if they want to sell sometime. All right. So they do not care about. I don't want to do not care. They will give priority to a specific price level, which means they will place order at a specific price level and say, anytime it hit $30.83, sell it because it's overbought. If more than 5 times its fair value, it's more than 10 times its fair value. I don't see these people, this stock is overbought, all right? So they have done their analysis, blah, 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 blah. They say it's too expensive. Now it's time to come out of it or to short it, sell and hold. So they may place orders. So you see here, they may place orders on a specific level like this. And if I drop down to the daily chart, can we see that level? No, we can see now. Okay. Okay. So they will just sell it, all right, keep selling it anytime it hit that level. All right, this is what we call distribution. So it's no, in that case, it's not more about okay, the time of the day. It's about at which price do we want to sell it. They don't want to sell or buy at any price. They want to buy and sell at a specific price level. So as long as the price is hitting those levels, they will just keep selling it or keep buying it. All right. So all in all, are you a day trader? If you are a day trader, first 30-minute candlestick bar must close first and trade the first 2 hours after the first 30-minute candlestick bar is closed. Go away because we will have the gap period until the next market is open. If you are desperate to trade again as a day trader, you can trade again the last 30 minutes. But if you are trading the last 30 minutes of the market, do me a favor, don't lose. What do I mean? Be very precise. All right? Make sure you get paid. It's completely stupid. It's so annoying to lose. Just wait, and then the market is about to close, and you rush and you say, "Oh, just say last 30 minutes," and then only to come and lose. It's not a nice feeling. So you want to make sure that the trade that you are taking during the last 30 minutes, you know exactly what you are doing, that your intention is to make sure you get paid. If you are not sure that you will get paid, just close the trade very fast. You can quote me anywhere. Close the trade very fast. So annoying to come in last minute and lose. Don't do that. In the old days, people were trading very much the last hour before a market is closed because they were not using trading algorithm, trading software. So human beings were trading. So market going down, market is about to close. The last hours, there are traders that are trading that. They don't trade during the whole market is open. They don't trade at all. They wait for the last hour. That's what they were doing in the past because they know that human being. So they trade the whole day. If the market, especially the indices, went up the whole day, they are waiting to sell at the during the last hour because those that were buying, pushing the market out during the last hour, they taking profit. They taking profit, and the price will pull back. All right, or if the market was going down the whole day, all right, those traders will wait during the last hours and they'll come and buy. All right, and the price will bounce up a bit, they grab a bit of profit and they run away. This was a strategy in the past, but that strategy is not working all the time anymore like before because now there are limit orders, there are trading algorithms, they don't have to close the trade, they can just move stop loss to X level and leave it there. So you don't see it as it happened before, a reversal at the end of the market. But if you want to trade the last 30 minutes of the market, look for reversal trading setup. But work on it first. Find something that has been working for you. Find a financial instrument that is responding to the last hours. And then if you find one is working for you, look for it and then take advantage of it. And then that's it. Okay? Have I covered everything? So we are talking about buy stock. We are talking, in fact, about buy any financial asset, any financial instrument, whether commodity, futures, indices, whatever it is, ETF, Bitcoin, cryptocurrency. The same rule applies. All right? Especially if you are day trading, you are swing trading, prefer choose the inter. Okay, if you want to shut it down on Thursday, do so. If you want to stay longer, manage and secure your gain as you go along. All right. Position traders also, apart from just selecting a specific key level or where they want to buy multiple time or sell multiple time, they also pay attention to the quarterly chart. This is position traders. They are powerful market participants, especially hedge funds are position traders. If you want to learn more about position trading, go to www.stochastic-market.com and check out our webpage relating to position trading. All right. So the position trader, they look for a quarterly chart. Every time a quarterly candlestick bar is about to close, which means on the 31st of March, on the 31st of June, 31st of September, 31st of December, a quarterly candlestick bar, 3-month candlestick bar is about to close because they use the quarterly chart to look for their trading setup. The position traders are those that are combining the fundamental analysis and the technical analysis. So they use the quarterly chart. So be aware of those market participants. Sometimes you may see that at the end of a quarter and the beginning of a new quarter, you may see a lot of activity of those position traders. I'm not saying that every time a quarterly candlestick bar is closed, they will definitely be active. All I'm saying to you, they do pay attention to the quarterly bar and they use the quarterly bar and they can intervene in the market when a quarterly candlestick bar is about to close. And we had last time, this is end of March, quarterly candlestick bar is closed for this stock. So today is very interesting time for people to see. So 1st of April, this one, not much has gone on here. Okay, if we see sorry, I'm speaking French to you now, sorry. If you see, for instance, you see, so this is the 1st of April, you see, it gap up. You see, this is a gap up for the Dow Jones and start running away. So you can imagine that during the last 30 minutes on Friday, there were people, like I told you, last 30 minutes, last hour, were buying, the computer were buying, filling orders ready. And now that's why you see, today it gap up and it continued to run up. So end of a quarter, you may see activity of hedge funds that were looking on a quarterly chart, making decisions. So I don't want the video to be too long. We may talk about other things later on, but you just need to be aware of what is going on in the financial market. It's an excellent question. What time of day is best to buy stock or financial instrument. If you have any questions, suggestion, lament, complaint, acclamation, blah blah blah, put in the comment section, and in due course I will be recording another video to answer your specific question. Alright? To learn more about the technical trading, day trading, swing trading, go to www.stochastic-macd. If this video has been truly useful to you, please let us know by giving us a beautiful thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial that can help other traders out there, feel free to share with your friend, okay, on Google+, Twitter, Facebook, and Tumblr. Subscribe to our YouTube channel. Our YouTube channel is 24 Stock Trader, digit 2, digit 4 Stock Trader. Our aim is to reach this year 2019, okay, the 1,000 subscriber level. We are now at 823, so we are doing okay. We want to push it to 1,000 subscribers. So if you know somebody that may be interested in learning to train, all right, you can shout about this channel, 24 Stock Trader. All right, recommend our channel to those that are interested in this topic. Okay. So this will conclude our discussion today about what time of day is best to buy stock. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about what time of day is best to buy stock. Happy trading to you all, and I will speak to you soon. Thank you for watching, and I mean it. Thank you very much. All right. Oh, la, la, la. I'm tired. I need to drink my tea.